Hello and welcome. You're watching First Tick here on News 9. I am Sriyash Maheshwari and with me is Amit Ranjan. Now, Indian markets have hit an all-time high once again in the morning trade today. Both Nifty and Sensex have opened up gap up, and what's driving the rally is the banking stocks. After a 1600 point run on Nifty Bank, the Nifty banking pack is once again in the limelight. The index on the whole is up 0.75%. Now, typically after a big reaction-based rally, the kind of rally that we saw on Monday market tends to give away some of these early morning gains, but this has not been the case. And I think what's more impressive is the fact that the kind of movement that we are seeing in the markets, given the global cues, those look rather weak, isn't it, Amit?
Yeah, diametrically opposite sentiments. Exuberance in India, but I see red everywhere else. Dow Jones closed in the negative 0.11%. S&P 500 closed in the negative 0.54%. Nasdaq closed in the negative minus 0.84%. Coming to the European markets, they were in the red as well. Stocks closed in the negative at 0.09%. As we speak, Hang Seng today is down 1.87%, and Nikkei as we speak is down 1.23%. Everybody outside India seems to be in the red.
And I'm also looking
at
the
after commentary that the Fed is done with raising rates. They are going to actually reduce rates. So it was expected that the markets will react in the positive. Probably it's not happening right now.
All right, and I'm also looking at some of the other cues that we track here on First Tick. Oil prices have remained steady with Brent crude hovering around the $78 a barrel mark on Tuesday amid uncertainty about the depth and duration of OPEC plus supply cut concerns and a drop that we are witnessing in demand across Europe and in China. Now, spot gold, after hitting an all-time high of about $2,135, corrected sharply and it was down about 2%. But the yellow metal is still holding above that 2,000 mark, and although it's down about $100 or so from the peak. US 10-year, which was hovering around the was last seen hovering around the 4.25% mark, up 5 to 6 basis points overnight, and the dollar index was down marginally at 103.6 sort of levels. Now, coming back to the Indian markets, as I mentioned earlier in the show, we opened gap up and Nifty is pretty much holding on to the morning gains. Nifty at the day's high was up as much as 20,800 mark. So we have scaled those levels. We have about 50 points down from there. And Nifty as of 9:30 a.m. this morning was up 0.32% at 20,750 mark. Sensex on the other hand has scaled 69,000 for the very first time. It's holding above that level, and as of 9:30 a.m. the 30 share index was up 0.25%, about 80 points above the 69,000 mark. The mid cap and the small cap, the rally continues over there. Both indices have also scaled new lifetime highs in today's session, and volatility as indicated by India VIX has picked up and sits at about 13.26% as of 9:30 a.m. this morning. But to discuss the markets in general and the stocks that we are tracking this morning, let's bring on board Mr. Brijesh Iyer, Technical and Derivatives Head at IDBI Capital. A very good morning, Brijesh. Now, the markets are pretty much at an uncharted territory. We have scaled a new record high for the third day in a row on Nifty. Nifty Bank continues to build on yesterday's momentum. In fact, it has been on the rise in the last 4-5 sessions or so. The question is simple. Given the kind of movement that we are seeing, where is the ceiling? Is it around the corner, or do we still have more way to go from here?
Yeah, morning. So I think definitely the momentum is positive. We believe that all-time high level will definitely be taken out. So that is already in action. So after that, the next leg of upside was somewhere. I spoke of the Fibonacci number, which was coming 20,600. So even that is now taken out. So now what I can see in the Nifty specifically, there's a shift in the range. So eventually, what was before like 18,800 to 19,800, that has shifted to the higher side. I believe this momentum should go toward the 21,000, 21,500. That should
Hmm.
be the odd levels on the higher side. Lower side 20,000 will now act as a support. So this would be the wider range, 20,000 to 21,500 for the Nifty. And Bank Nifty, I am all this while Bank Nifty, I this 46,000. So the day like yesterday for the it was a very strong opening for the Bank Nifty, and 46,000 was taken up. So now for me, technically above 46,000, I believe for 50,000 is what technically I think Bank Nifty should be heading towards this entire month right now. Though we believe this is whatever the move we saw, it is an extended move. But then, because of this, the weekly and monthly time frame is strongly in the hands of bulls. So now I don't believe that there will be a very easy correction in the market. As you said, the VIX is gearing up, so there would be volatility will be higher on the high side. But then bias will be positive. Bank Nifty way it has taken on 46,000. I think now that will act as a support on the downside. Maximum correction would be that gap when it is coming to 45,000. But net the bias will be extremely positive. Nifty should be 21,000. Means it will be very difficult. But then I believe at least 21,000 level will be taken out, and on
Hmm.
maybe in between 21,000 to 21,500. That should be the highest range for the Nifty.
Hmm.
And Bank Nifty somewhere close to 50,000 is what I think we should be heading to during the next couple of days.
All right, that's the view on Nifty and Bank Nifty. We'll continue to scale uncharted territories on both indices. But, as you pointed out, volatility has spiked and we are beyond 13 sort of levels on India VIX. And it becomes a trader's playground pretty much. And, one of the few sectors and the stocks that are performing are the insurance stocks after a very long period of not performing rather. And in that space, LIC has been one which has given very strong returns in the last 1 month or so. The stock is up almost 18% or so in that time frame, but about 20% or so below the IPO price. So can we expect the rally to continue first of all, and is the IPO price of 949 something that becomes a medium to long term target?
Before heading for the 940, I think 750 is one of the resistance zone which we need to keep a watch on, because this was the level during the month of December 22 from where the market has corrected, like LIC has corrected. So eventually on the way up, I think 715 can be a possible resistance, but structure right now looks positive. Maybe to be very frank, I cannot take any buy trade setup at the counter, but
Hmm.
momentum is bullish. I think let's be little cautious close to 750 levels. If 750 levels are taken out and we get a very strong close, then I think this momentum will continue. But then looking at the candlestick, the way the last 3-4 days the rally has come, it doesn't look so promising at this level.
Hmm.
I would be cautious close to 750 mark.
All right. Another stock that I wanted to pick your brain on was Eicher Motor. Now, the stock has again given strong returns in the last 1 week or so. Yesterday, it was among the top gainers. In fact, it was a top gainer on Nifty. Now, in the two-wheeler space, between the four stocks, Bajaj Auto, TVS, Hero, and Eicher, it's been an relative underperformer. But we are now seeing some sort of a breakout on price charts. Can we expect the rally to continue in Eicher Motors?
Yes, definitely. I think right now it's close to 41,050 level, slightly overbought, but then that doesn't worry me, because I think we are heading to 44,000 on the 4,400 on the upside for the Eicher Motor. The weekly
Hmm.
structure, because in weekly there is a cup and handle kind of a structure breakout. It's a very strong bullish pattern. And somewhere if we see even a correction of 100, 150 points on the downside, I think that I will view this as a buying opportunity. I think in short to medium term, I believe 4,400 should be on cards. So extremely positive on HL Motors. Anytime, maybe during the next couple of days, if there is some profit booking and this comes close to 4,000 level, I think we should view that as a buying opportunity. Or maybe somebody who can take risk can even enter at current prices, what I believe.
Good morning, Brijesh. I'll drive your attention to another stock that's making the news. That's Honasa, the parent brand of Mama Earth. It had a muted listing. It fell. It rose on a Jefferies buy call, rose up to 486, even though the buy call was up for 530. Now it is on a continuous fall last 5 days. Now there is news that Fireside Ventures is going to sell 61 lakh shares of Honasa Consumer, which is the parent company of the brand Mama Earth, in a block deal tomorrow, that is December the 5th. This will amount to a 1.9% stake in the company worth more than rupees 230 crores. Sources are saying that the range of the price of the sale is between 368.7 and 384, which includes a 4% discount. What do you make of Mama Earth or Honasa? If it is falling so much, is it a good time to get in or wait and watch till the deal is through?
And the block deal price seems to be within the price that we are trading today.
Yes.
I think the stock is down about 1%, but in that range, you know.
Right. But then it's a very limited, it's a newly listed, and the from the technical, it would be very difficult. Maybe whatever the little bit what I can see and sense, it looks like negative. Maybe 340, 320 is on the downside. There is obviously there are no charts, so I won't be able to comment much. But then whatever the very little hourly and the last 1 weekend, so I can figure out there is a good amount of distribution is what I can see. So from the technical point of view, this can be termed as a distribution. The entire rally for the last from the 10th of November, whatever the rally we saw till this 24th November. So if I take the retracement of that particular 50% mark is 373, and
Right.
then 61.8 mark is 345. And it looks slightly negative to me. I have a sense we may come somewhere close to 340, 320 level. We don't have any bias trade setup in this. I would be cautious, and I don't have a view whether I would take a buy at 340, 320 if it comes. So it's a cautious and avoid.
So it's at 379 right now, so it's better to avoid because you are expecting it to go to the 340 levels. Brijesh, before we let you go, we've spoken about Eicher, LIC, which is doing well, Mama Earth. Which are the stocks you recommend for the investors just now?
Yeah. So this time I'm seeing the market is already moved up. I'm not going with any front time blue chip counter. I would be taking more of a mid cap space, and slightly the positional view I think we should be taking. The first one which came was like Timken India. So yesterday that has given a very good breakout. So one should go along with the current price with the stop loss of 3030 for the target of 3,200. So that's one of the 10-15 days kind of a positional trade. Again, KEC International is something which is, this is again the positional bet for 10-15 days. Current price, the stop loss would be 694 for the target of 648. Crompton Greaves is a smaller, maybe for 3-4 days. Again, the directional view. It has given again a breakout. So I think that breakout basically this would be more favorable for the F&O traders. So one can go long at current price with a stop loss of 289 for the target of 308. Besides this, I think PNC Infra is also one thing which has given a very strong breakout at the current price with a stop loss of 333. I think for the target of 368. That can be one more bet. And one more is the Godrej property. I think it has moved a little bit higher. But then whenever the stock corrects close to 1900, 1910, I think that's again an opportunity in Godrej property with a stop loss of 1868 for the target of 2020. So that this can be the few positional trades which we should be looking at.
Now, Brijesh, interesting that all your picks, as you also pointed out, are from the broader markets, the mid cap and the small cap space. And
Yeah.
I mean, the entire, at least the most of the analysts that we have been speaking to in the last 1 week are perhaps recommending focusing on large caps now. Are you still bullish on the prospects of mid caps and the small caps?
Maybe there is a stock specific approach because I do believe wherever there is a momentum and the trend is positive, we should be betting on that. So I just got this idea. So and look, this particular stocks, if we any of those look at the weekly and monthly time frame, it's look quite positive. So I'm taking a stock in that point of view. For example, let's say since the market has moved for day after tomorrow, maybe by the end of this week, if there is a slight correction in the market, our stock should not get triggered. So I want to play a little bit safe.
Right. All right. That's Mr. Brijesh IL for you, sir. Always a pleasure speaking to you. Thank you for joining us here on News9.
Sure. Thank you, sir. Yeah.
But moving on, Amit, the theme remains and the markets are continuing to build onto those early morning gains. And as I'm made to believe, Nifty has in fact scaled a new lifetime high, has gone past 20,800 mark, and the new lifetime high is at 20,813. We have corrected slightly from those levels, and as of 10 a.m. this morning, we are currently about 25 points shy of the 20,800 mark. But continued strength we are witnessing across the board, and the mid caps and the large caps are also doing fairly well, holding on to the morning gains. But the story as far as this week goes, it's the banking pack. After a 1600-point run up that we saw on Nifty Bank, the index is up another 1% of 500 points or so, and it has scaled 46,900 levels for the very first time. And if you remember, for the longest of time, we have been talking on this show that the banking pack is the one particular segment of the market that is not participating, that is shying away from this all-time levels, record levels that we are seeing on pretty much across the board. And now it has started to participate, and as we know, it contributes about 35 to 40% of the entire Nifty basket. So that will perhaps keep the market moving.
If you go by the experts' commentary, running up to the elections 24, post these results, the concentration is going to be on PSUs and the banking pack. So that's a positive to that on that front.
Interestingly, that you bring up the PSU stocks, and we have been tracking PSU stocks as well very closely. Some of them have turned multi-baggers this year, isn't it?
Yes, and going by yesterday's commentary of the Prime Minister post the win in three states, he named quite a few industries, and quite a few floundering PSUs are back up and they are doing well and giving good returns. Now, markets basically are reform oriented, and they like reform oriented and market friendly governments. Probably that's why the exuberance after the win in these three states. PSU stocks had a monster rally of almost 900 points on Monday. So you can see the reaction.
That's a PSU index.
Yes. So you can see the sentiment post the victory of the BJP, which is looked at as a market oriented, without going political. Even today, Gas Authority, BHEL, they are flying high. How many people really speak about these stocks? And some of them have turned multi-baggers. If you allow me, we can go. I'll go on to the video wall. If we can play it. SAIL, 1 year gain 6.75, last 5 days 4.97%. If we can move on to the next one. Hindustan Aeronautics, which was subject to so much of controversy and so much of debate, 81.43% in the last 1 year. Somebody who had invested in this last 1 year would be raking in profits. 8.71% in the last 5 days. BHEL 98.57% in the last 1 year, 13.17 in the last 5 days. LIC, you already spoke about it, 9.96%, it has been consistent, 6.03, it was already on a high. Coal India, 53.3%. Coal has been again subject of controversy. 53.3%, 6.03% in the last 5 days. Gas Authority, 52.28% in the last 1 year, 14.35%. How many people speak about Gas Authority of India? General Insurance, 107%, a multi-bagger here in the last 1 year, 3.96% in the last 5 days. And I'll come to the big name, ONGC, 40.66%, big gain, and 7.01% in the last 5 days. Whichever way you look, all of these PSUs, and there are more than 400 PSUs listed. I'm not talking about the oil marketing companies. We spoke about them last few days back. They're all attractive. So, but I've not listed them here because we recently spoke about them. There are close to 400 PSUs listed. So it will take a long time to go through all of them. But most of them are giving very, very attractive returns. And why it is important? Because not many people look in this direction.
Right, right. Let's also bring on board Mr. Sudeep Bandyopadhyay and take this conversation with him. Sir, a very good morning to you. Thank you for joining us here on News 9. PSU stocks are back in the conversation, showing strong returns, on a 1 week basis.
Yeah, absolutely. I think, as you guys were discussing, PSU stocks have done generally well over the last, I would say, 8 to 10 months. And of course, yesterday's thumping win, day before yesterday's thumping win by BJP in the three northern states, I think, led the market to believe that general elections of 24 is a foregone conclusion and continuity will prevail. And with that theme, I think market has been giving thumbs up to PSU stocks in general, because there's absolutely no doubt that this government has focused on a lot of things which are, I would say, convenient or in favor of PSU operations. Just look at defense. I think this is one area where the landscape was dominated by PSU companies, and of course, the government's defense make in India has been a major policy. Look at railways. I think I have never in my entire 30 plus years of career have seen so much focus on railways, and it's a 360-degree focus. It's not just buying wagons or just doing small bit here and there. Whether it's a station revamp, whether it's the electrification, whether it's the gauge conversion, whether it's a signaling infrastructure, whether it's those fast trains. I think it's an all-encompassing development in the railway space, where again by and large PSUs dominate. Look at oil marketing companies, look at power sector. I think, or look at heavy industries, defense electronics, and of course the PSU banks. Now, if you recollect, during the first term of the current government, there was a major meeting organized with the PSU leaders, PSU bank leaders at a workshop. And I think the mood and the structure started changing from there on. The private sector, recruitment from private sector of CEOs, which was cleared, and some of the private sector, stalwarts joined PSU banks for a limited period of time, gave them leadership. So I think the structural change has been happening in PSU, which was to a great extent under the radar. But now it's coming to the surface through their sheer performance and, of course, convenient and congenial environment.
Good morning, Mr. Bandyopadhyay. Carrying on from what you just said, I'll drive your attention to three PSU stocks that we spoke about. One is HAL. It has given a return of 83% over the last 1 year. Then there is General Insurance, which has given a return of over 100% over the last 1 year. And then there is BHEL, which has given a return of 98%. Is it too late to get into this, or still time and it is going to rally even further?
Look, I think, you talked about three stocks. I think two of the stocks, the first two stocks, I think I also am a fan of, and absolutely no problem getting into them even now, provided you have a long-term horizon. You talked about HAL. Now, defense contracts, and they've been getting contracts by the dozen, and they're all good, and these will be delivered over a period of time. So I think the excitement has got front-loaded, I would say. The execution and the delivery of performance and profit will be over a period of time. So to a great extent, I believe in the defense PSUs, the excitement has been front-loaded. I'm not saying they're bad companies. I'm not saying they'll perform badly. I'm not saying they will stop getting contracts. All that will happen. But the performance out of these contracts will start coming over a period of time, because these are not complete contracts to be completed in 6 months or 1 year. They are over the years. So, why only HAL? Look at Nasgau Dog, brilliant company, fantastic performance, submarine segment they have got into. So I think all these are fantastic companies with a great, upswing in valuation, which we have seen over the last 12 to 18 months. They're good companies at current level if you have a, maybe 3 to 5 year time horizon in mind. As far as BHEL is concerned, I am a bit skeptic. I think this is one company which has disappointed the market again and again over the last how many years, as long as I can recollect. There has been this euphoria, there has been this excitement, and then they have disappointed. Look, getting orders of boilers from NTPC, which is what they have been getting, is a foregone conclusion. Because NTPC is expanding rapidly, we need power. And by the way, NTPC is one stock which I love. That's absolutely fine. But delivering on those contracts in a profitable and efficient manner is where the skill of the company and the performance of the company should be tested, not on merely grabbing orders. Because we have seen in case of BHEL, there have been enough and more disappointment. So this is one stock I will be a little wary of.
General insurance, is that a sector to be looked at? Because a lot of private sector companies have come into that and have been making very attractive offers. So do you think general insurance is also a company to be looked at even now? And it is a multi-bagger right now.
Yeah, absolutely. There's a big distinction I would like to point out that generally GIC, I think we have to remember that GIC is a reinsurance company. They are not competing with the ICICI Lombards of the world. They are in a slightly different space. So, of course, there is a huge opportunity with the insurance penetration and insurance volume in the country going up. GIC's scope of business will keep increasing. And there is, I think, a regulation which I think compels all Indian insurance companies to place a certain percentage of the risk through GIC only. So with increase in overall insurance business, GIC's business goes up. And absolutely, there's a no-brainer. So GIC is absolutely fine. As far as general insurance concerned, I think we are definitely positive. Even life insurance, we are positive. But my preference will still be towards the private sector, companies, because they have been operating very, very efficiently. They have been increasing market share vis-a-vis the public sector, peers. And if I have to pick some stock, I will still go back to private sector, general insurance or life insurance companies at this stage also.
Now, Mr. Bandyopadhyay, of course, there is exuberance in PSU stocks and the market at large is, rallying, and typically after a big reaction-based rally that we saw on Monday, the market in the past historically has given up gains. But this was not the case today. We opened gap up, and as we speak, we have reclaimed 20,800 mark. Nifty Bank has scaled a new lifetime high of 47,000. Are we well and truly on a pre-election rally?
Well, I think definitely this is going to be a mini rally, and I think we should probably think slightly differently. That the market will go up is probably a no-brainer. And now the question is how much it will go up,
right,
and in what manner it will go up over the next 3 to 5 years. Will the rally be front-ended? Then there will be a massive consolidation for a considerable period of time. Then again, it will break out, or whether it will be an evenly spread out rally. That's what I think it is. Look, there is a Goldilocks scenario in Indian capital markets today. We have strong domestic tailwind, and we have a very strong global tailwind as well. Look at what happened over the last, I would say, for 2-3 weeks in the global markets. The scenario has completely changed. In US, there was a risk aversion. We were talking about, higher for longer. Now that higher for longer scenario, nobody is talking about. People and everybody, rightly so, is talking about probably a 75 to 100 basis point cut in the next calendar year by US Fed. And risk on mood amongst the FIIs is back. So I think that's a fantastic scenario for an emerging market like India. And particularly in a scenario where I think China has scored a lot of self-goals, and FIIs who are actually structurally looking at investing and who are long-term investors are definitely looking at India. I'll give you a small figure, very rough figure. FII's investment in India is close to about 0.6 trillion, whereas in China, the investment is about 3.5 trillion. Now, just imagine, now out of that 3.5 trillion, if even 1 trillion moves to India, that will mean tripling FII's investments in India.
Right.
So the opportunity of money coming in through the foreign route is huge. And to my mind, apart from domestic exuberance, domestic SIP flows, which have been sustaining and pulling the market ahead when FIIs were, now we will gradually start seeing a floodgate of FII money also coming in. Now, probably they will predominantly come into large cap stocks. So we have to position ourselves rightly, There's a massive mid-cap and small-cap rally going on. There's no harm in that. But I think large caps will start to steal the limelight in the near future.
All right. And so speaking about the return of FIIs, they have in fact turned net buyers. They, after a period of 3 months, they turned net buyers in November. And the buying has continued, in fact, in December as well. In the last 2 sessions alone, they have bought equities worth 3,600 crores. And perhaps their return could drive the markets to, the peaks over the next few months. But with that, we have completely run out of time. So thank you very much for joining us here on News9, sir.
Thank you.
But before we wrap things up, let's look at how the markets are doing, and they are doing fairly well. Nifty has in fact rescaled the 20,800 mark. Now the new lifetime high has shifted to 20,813 mark. So we are just about 8 points shy of that. Sensex has also built onto the rally. It's above 69,200 mark. Mid cap and the small caps spaces, both the indices are also in line with the headliners. Mid cap 100 is up about 0.54% at 44,153 mark. The small cap index, on the other hand, is leading all 3 indices with gains of about 0.7%, sitting well above the 14,500 mark. Volatility has picked up in today's trade, and India VIX as of 10:15 a.m. this morning was up 3.5% above the 13.4 sort of levels. But with that, it's a wrap on this edition of First Take. Keep watching News9.